If you see Ming Ming the duck, that's what you've got to press in order to get your help. Learning Intention Aim B6, Component 3. To complete, interpret and check the information on financial documents and statements. This lesson will be about fixed and current assets and current and long-term liabilities. There will be some formula in this, so you will need your formula sheet with you. Statement of financial position. All enterprises have money invested in them. Even a window cleaner must have a bucket and a ladder. A statement of financial position shows how much money has been invested in an enterprise and what it has been spent on. The purpose of a statement of financial position. An enterprise will normally produce a statement of financial position once a year, usually on the last day of the financial year. The statement is a snapshot of the enterprise's financial situation on that particular day, but summarises the activity from the whole year. The statement of financial position shows, number 1, the value of all assets and liabilities in the enterprise, and 2, the sources of capital used to finance the enterprise. Click on all the Ming Ming ducks in chronological order as you go down to view this statement of financial position. Each duck's going to help explain what you're looking at. These are fixed assets that are unlikely to change within the next 12 months. Vehicles and equipment, if you think about it, the prices don't go up daily or weekly. They do go up and down over time, but it's considered a large amount of time, so they're still classed as fixed assets. These are current assets which are likely to change on a regular basis. Stock, if you think about it, that's going to sell hopefully daily. Debtors, that's the money coming into the company. The cash in the bank, all things that can actually have a daily different amount. Current liabilities. These are debts that a business must pay within 12 months. So a creditor is someone who's given the business money. Net current assets. Now remember, the formula is current assets minus current liabilities. The difference between current assets and current liabilities is also known as working capital. So on that particular line, you need to get to the answer 800. So if you look on the actual chart on figure 3.11, then you need to see that current assets total 1,700. But if you look on the middle column, you'll see that current liabilities is only the creditors, which is 900. So if you minus 900 from 1,700, you're left with 800, which is the number in the right-hand column on net current assets. The bottom 3 lines can be seen as virtually on their own. They are the equity of the business. Equity means the amount of capital or money owned and controlled by the owner. Now if we look at those bottom lines, remember we've got the total assets less current liabilities, which we've just covered. So now we've got to look at how we calculate the bottom bit. 1,500 fixed assets plus 1,700 current assets gives you 3,200 total assets. £3,200 worth of total assets minus the current liabilities, 900, gives you 2,300, like the line says. Now the shareholders. Shareholders, this is the capital, these are the owners, they've put in £2,000, and the retained profit is another term for net profit. So all the cost of sales have been deducted and all the expenses have been deducted. So if you add the two together, you have 2,300 equity, and if you look, it balances with the total assets minus current liabilities. So as Ming Ming says at the bottom, shareholders' funds is a source of income invested by the owners in the enterprise. The sum always balances with the total assets less current liabilities. You can't exactly take more retained profit than you actually have in your equity. What other annotation or note would you add to this statement of financial position to help you remember everything on it? This isn't a trick question, this really is whatever you think will help you remember what's what. So just write your notes in the space above. An asset is something that an enterprise or the owner of an enterprise owns. Assets are usually broken down into two categories, fixed and current. Fixed asset. A fixed asset is something that does not change in the short term, the owner of an enterprise will use to make money. For example, a vehicle used to deliver goods is a fixed asset, so is a factory or a piece of machinery. Current asset. A current asset is an item that will change with every transaction, such as stock, debtors, people who owe the enterprise money, enterprise is another word for company, cash in the bank. Current assets can usually be turned into cash quickly.
The only gift I'm getting is Star.
So let's check you've been listening and following the slide so far. Question 1. What does a statement of financial position tell us about a business? Write your answer in the box below. Question 2. What two things are shown on a statement of financial position? Go back and have a look at slide 4 and double check the answer. Question 3. What is the difference between a fixed asset and a current asset? Question 4. Explain the difference between assets and liabilities. Now don't get caught out, we're not just looking at fixed asset and current asset, we're now looking at the whole thing, assets and liabilities. Question 5. Give the formula for net current assets. It was mentioned on slide 4, but if you can't find that, make sure you get your useful document, the finance formula, open. Question 6. Why would a business calculate its net current assets? So have a think about it. We've just looked at the formula for net current assets, which was current assets minus current liabilities. So if you're looking at current assets, current liabilities, the ones that you can turn into cash in under 12 months, the ones that you can pay in under 12 months, you're then left with what you've got left. Now, isn't that really telling you how much cash, how much value you can get to really quickly? Write your answer down in the space provided. Question 7. Explain the difference between current assets and net current assets. Now you haven't covered this question before, think about what you've been asked. Current assets is the one you just go and read and actually see it on the statement of financial position. Net current assets you actually need to calculate, so something has been removed from that particular final number. The clue to answering this question is remembering what that calculation, what that formula is for net current assets, and then you'll be able to write your answer in words. Question 8. You've been asked to work out the net current assets for this company with these figures we've shown you. Here we go, double checking, double checking, double, triple checking that you really get net current assets. So you've got to remember the formula. Have we remembered the formula? Current assets minus current liabilities equals net current assets. You've got to look at these 4 figures. Which figures do you need? Put your working out in the working out box. Double check that you've got the formula, so write the formula in the formula box. Any of the keywords, write down in the keyword box, and then guess what? Write your answer down in the net current asset box. Liabilities. A liability is something that an enterprise owes, including all the money. An enterprise owes to other enterprises, other companies, that needs to be returned to customers or has been borrowed from a bank. Liabilities are broken down into 2 categories, current liabilities and long-term liabilities. Current liabilities. A current liability is money that must be paid back within a year. These are short-term debts. Current liabilities include trade credit to suppliers or a bank overdraft. Long-term liabilities. Long-term liabilities include loans that can be repaid over a longer period of time. They might also include the initial investment, a sum of money, put into the enterprise or company by its owners. An enterprise or person who is owed money is known as a creditor. Make sure you get that the right way around. Figure 3.9, that blue one on the right, is an easy to remember summary of how some of the financial terms you have read about here relate to each other. Make sure you get the creditor and the debtor word the right way round. A creditor is part of liabilities. Question 9. Using your own example, your own business example, explain what a liability is and explain in your own words, please. No copy and pasting. Question 10. Complete the table below to identify which is a long-term liability and which is a current liability. All you have to do is add a tick into either the current column or the fixed column. Now there's already a tick put onto the PowerPoint, so if you can't find the symbol, then copy and paste the tick from this slide.
It's a team. The only reason we choose teams is because you want to.
Question 11. Explain the difference between long-term and current liabilities. Make sure you go back to slide 10 and double check these definitions to help you out with this question. Question 12. Why is it a risk to have more current liabilities, the ones that you have to pay up within 12 months, than long-term liabilities, the ones that you need to pay over a longer amount of term, longer than 12 months? This is it, question 13. You're let loose. You're expected now to have a go at filling in your first statement of financial position. Woohoo!
Yeah.
What do you need to add up to work out, to calculate the value of total fixed assets? This one's a bit sneaky. You've got your total current assets, you've got a value for inventory, but you don't have a value for debtors. So this one is using a little bit of algebra. Inventory plus something equals total current assets of 1,565. You've got to work out the middle bit. Here it is again, you've got to work out your net current assets. Remember the formula? Current assets minus current liabilities. So you've got both of these numbers now, so you now need to do the calculation and put the answer at the bottom. There's a little Easter egg for you. All that formal bit about financial statements. So what you've got to work out now is net assets. Now net assets basically is total fixed assets plus total current assets. Off you go. You're still getting the answer even though there's an Easter egg on this slide for you.
Okay, you're definitely not the first on this one.
Question 14. Damien needs to do some analysis of the enterprise's finances. He asks you to help him. Complete the extract from the statement of financial position. You need to find out net current assets and net assets. So the first thing you need to do is look to the right on the slide and actually look at the working out space below. And the second thing you need to do is then try and remember the formula. So I suggest you write your formulas down in each of those boxes and then off you go.
What just happened there? I was going that way, so it was like, right, we're going to go left.
Did you write down those two formula? Remember, net assets, total fixed assets plus total current assets. Write down the formula, then underneath you can write down the numbers and then work out the answer. And net current assets minus current liabilities. Guess what? Write down the formula. Underneath each you can then write down the numbers to help you working out and then write the answer in the space provided.
Yay, I've won now 12. I'm second. What's going on?
Question 15. Net current assets are often referred to as working capital. What is a business able to do with working capital? Now here you might need to do a little bit of research to find the definition of the word working capital. You do actually have the answers in the slides, but but we've not yet used the phrase. So have a look and try and make sense of it, because the answers are in the slides. However, for your answer, absolutely no copy and pasting, there's no point. This is about showing whether you've understood the last 14 slides.
Seriously? Where's someone?
Question 16, A, B and C. Now in an exam this would actually just be question 16. I've added A, B and C on it to help you break it down and realise it's not as scary as it looks. Andy works from home growing apples, which he then sells to stores across the region. He wants to know exactly how the assets and liabilities of his business have changed over the last 2 years and has decided to create a balance sheet. So your first 3 jobs. A, complete the pale yellow squares. If you look at the pale yellow squares, you've got your first line, which is fixed assets. So you've got, in 2019, land worth 100,000, a computer worth 1,000. So on that, you need to add it up. You do the same for 2018. For current assets, pale yellow line, you need to do the same, you add them up. Then on the last pale yellow line, you've got current liabilities. Guess what? Pale yellow is all about adding them up. B, calculate the gold squares. And if you look, the command word has actually changed. It's now calculate. Working capital. We've just covered this on the last slide. It's also known as net current assets. The net current assets, here we go again, current assets minus current liabilities. You've now actually got those numbers, so you can calculate that one. And the C, calculate the pale green squares. You've just been covering total assets. The formula is total fixed assets plus total current assets. So on the green squares, you've just got to add them up. Question 17. Why would a business calculate total assets less current liabilities? Now remember what each of these words actually mean. Total assets is fixed assets plus current assets, and current liabilities, just to remember that time scale. Current liabilities are the amounts a business has to pay back within or under 12 months, what they've got to actually pay back to somebody else. So think about that. Total assets less the liabilities you've got to pay back within 12 months. I think you can work out that answer and write it in the space below. Flying home now. Question 18. Give the name of the formula where you're calculating total assets less current liabilities. It's just the name of the formula you need to write in this answer. Question 19. A and B is broken down into 2 parts. In actual fact, in the exam, you probably will get this type of question in 2 parts. Daisy's dresses. Daisy sells her unique design of dresses on eBay as her full-time job. She has compiled the information below and needs you to help her to construct a balance sheet or a statement of financial position for her. A. Complete the missing information in all the shaded boxes. Remember what you need to do for the pale yellow boxes. If you can't remember, go back to question 16 on slide 16 and double check what the pale yellow is asking you to do. Next, calculate the gold boxes. Remember the command word is changed to calculate, and it's net current assets. Working capital is just another term for net current assets. You know the formula, we've gone on about it numerous times in this lesson. And then finally, the green boxes, total assets less current liabilities. You need to do that calculation. If you can't remember what it is, go back again to slide 16, and it's also on slide 17. Question B. Analyse the performance of the business over the last 2 years. This time, you've actually got to look at the numbers that you've written. You've now got to write some words in the box below and actually decide whether this company, Daisy's company, is doing better or worse from 2018 to 2019. Try and justify it as well. If you think she's doing better, make some comment in the assets, whether the assets are more than liabilities, and you think she's doing worse, then make the comment about the liabilities over the assets. It's up to you to have a go. And finally, don't forget to look at the working capital, the net current assets. That's a big point into how well a business is doing.
Green, great, green, great. Well, let's wait to see your name in red.
The final question, question 20. Now you understand the terms, statement of financial position, explain a further 2 ways in which Daisy, the company from slide 18, explain a further 2 ways in which Daisy could improve her business and justify your recommendations. Write your answer below. This one really is about your opinion on what they can do in terms of their assets and liabilities. It's about you making a financial recommendation.